As a certified financial planner, every 4 years, I get questions from tons of folks asking, hey, what adjustments do I need to make with my investments because of the upcoming election? Or more importantly, boy, should I be careful with my investments because of the uncertainty with the election? So how do we do that this year? And is the stock market even pricing in anything with the election, or is it just focused on the economy and coronavirus? That's what's coming up today. This is your next Wise Step video. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Coherent Financial Group. If you're new to this channel, welcome. Hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so every 4 years we get an election, and every 4 years I get questions, tons of questions about, hey, what's this mean for the market? Or if there's a change in the party or the president, what's that going to do to the stock market? And what should I do with my investments? And this is interesting. I saw a report that came out, an article that came out from Fidelity, one of the technical analysts that I enjoy listening to, Urian Timmer, and he's basically shared and updated his analysis going back to the 1700s of how the stock market is impacted based on the presidential election cycle every 4 years. So does the stock market do better when a Republican's in office or a Democrat's in office, or when the House and Senate and Oval Office, they're all split, or how's it all work? And then does the stock market tend to do well in the first or second or third or fourth year of a presidential term? This is really, really interesting. So check the link below, check it out. If you're a geek and you're interested in all that stuff, there's a lot of very, very interesting analysis there that I believe is completely unbiased. I mean, there's no agenda there. It's just sort of the facts. But here's what the facts really reveal: that the actual election, that the actual president has very little long-term impact on the stock market. That's probably not what you expected. It's not what you want to hear. It's a little anticlimactic. But it's the fundamentals. It's corporate earnings. It's the unemployment rate. It is GDP growth. It's all sorts of other things that are called fundamentals that actually influence the long term of the stock market. Now, are there a couple other things that we could take away before we apply it to what is happening right now? The first is, I would tell you that it's the fourth year of a presidential term that is usually the best in the stock market. The first 2 years of the 4-year term tend to underperform. The second 2 years, or the third and fourth year, tend to outperform significantly, and it's that fourth year that does the best. Well, guys, the fourth year is the election year. Believe it or not, the election years are usually the best in the stock market during those 4-year time periods. That's incredible. So I've been doing this a couple decades now. So when most people come to me and say, hey, what do you think I should do? Should I be careful with my investments? Because each of us, we obviously have our own political biases or political views, and that might influence you to say, I should be cautious, or I should be careful, or I should make changes with my investments because of the upcoming election. And history says the fourth year, the election year, tends to be good. So try not to make any short-term adjustments. How do we apply that to today? How do we apply that to right now? I actually do not think Wall Street is being influenced much by this year's election uncertainty. And I would actually tell you, in the short term, watch out for some upcoming volatility, because there's a lot of uncertainty surrounding this year's election. And I don't think that's influencing the market too much right now, and I think it eventually will. There's 3 big uncertainties that stand out to me, and the first one is just the ability to vote, period. The logistics of voting right now. What did we just have? A primary election in Georgia that was just a debacle, and apparently, research is coming out and saying we are not ready logistically to hold an election with social distancing and in a coronavirus type world. I don't know how we're going to do it. The mail-in voting, the social distancing guidelines, this seems like a recipe for disaster. And I think that's going to create some uncertainty as we get closer to November, and that uncertainty could show up in Wall Street. The second thing is, I don't know if you've noticed, No, everyone has stinking noticed. We have enormous unrest happening right now in the United States. It is just rippling across, let alone what happened even this past weekend in Atlanta. I mean, guys, there is significant social unrest. To think that that's all going to be put to bed by November's election, I think is unlikely. I think it's actually going to shape what happens in November. And so I think that's going to create a lot of uncertainty. If you're far right or far left, you've got your strong opinions. If you're in the middle, we're very polarized politically, but for those people that are on the fence or in the middle as to where they would vote, I think what's happened over and how the country has been responding, different, even going down to mayors, let alone all the way up to the president, how the response has been to the unrest, I think is going to push people out of the middle, and they're going to quickly take a side if they haven't already. And so that is definitely going to shape the election, and I don't know if Wall Street has priced that in yet. And then finally, which type of party is going to navigate us through this recession and out of this coronavirus world? The stock market, I don't know if you like him or not, it really doesn't matter. The stock market has liked the pro-business policies and tax cuts that have come the past 3.5 years. It has. And apparently research has been done that said, listen, if Biden wins and increases corporate tax rates, now he can't do that on his own, but increases corporate tax rates, that will account for a 10% drop in the US stock market. That's not my own research, I've just seen that from other news outlets. So right now we are in a recession and we're in a global pandemic. That uncertainty as it relates to policy, as it relates to policy between the Republican camp and Trump and the Democratic camp and Biden, I think will create an enormous uncertainty. And I don't think Wall Street's pricing that in much. I would expect Wall Street to start pricing in that uncertainty as we get closer to November. So I said at the beginning, the presidential election, or who's in office, has very little long-term influence on the market. But election years tend to be positive. Well, we already know it's going to be a huge obstacle for this year to be positive in the stock market, but it doesn't look like the stock market is pricing in much of the uncertainty, is pricing in much of what we're going to see come November. So I would prepare for it. I would expect it. That's yet another thing that the stock market is going to grapple with between now and the end of the year. So what should you do? Once again, make sure you've got your investment process connected to your overall financial plan. And if you're cautious on the overall election and what that means for the stock market, make sure you're talking to your certified financial planner, because history would say, don't worry about it. These tend to be good years in the market. But right now, with everything that's going on, likely there's going to be a big impact. So contact your CFP to see how this affects you. If you're looking for a CFP or you need some comprehensive financial planning, you can always contact one of the CFPs on our team at Korhorn Financial Group. Find us online, korhorn.com, or give us a call, 574-247-5898. All right, you're now ready. Go out and take your next wise step in your financial life.